The rand edged lower against the dollar in early trade as traders gauge an eventful week that will host the release of inflation data and the central bank's first rate decision of the year. Our portfolio manager at Rand Swiss Viv Govender joins us to assess the latest market developments. Viv, a very good afternoon to you. Thank you so much for joining us. The rand remains under pressure against the dollar at the start of the week. What is influencing those declines?
Well, we must remember that from a little while before the end of last year, we were weaker than we are right now. Before we had a period of strengthening. This strengthening came about when we saw the chance of a U.S. rate cut, earlier this year come through, quite strongly. Since then, we've had some economic numbers from the U.S. that have decreased those chances, and that I think is one of the big reasons we are seeing that, the rand is weakening again. If the U.S. was cutting, rates aggressively and early this year, the rand will strengthen because, one of the reasons that you buy a currency is to get the interest the currency provides you.
Now, ratings agency Fitch sees the government coughing up 50 billion rand in cash for Transnet over the next 2 fiscal years. What are your thoughts on these sentiments?
It's a necessity. People in South Africa don't realize it because we don't interact with Transnet as much as we interact with something like Eskom, for instance. Transnet in many ways is more dysfunctional than Eskom in terms of the total capacity it's had over the last decade plus or so. And Transnet is important to the country because without Transnet you can't get the stuff from the mines to the ports to export it. You can't basically operate manufacturing easily in the country because you can't transport your stuff around the country, equipment or tools, goods, etc. And so it's one of the key bottlenecks for the economic growth in the country. So yeah, it needs to be done. A lot of money, but it may not even be enough. I mean, if you look at just some of the backlogs of Transnet and some of the issues that they're having, 50 billion might not be sufficient to get this company back on track.
On the other hand, U.S. ratings agency S&P expects South Africa's banks to remain resilient in a weak local economy. How do we begin to make sense of these utterances?
Our banks have always been strong. I mean, if you look back to 2008, the financial crisis, South African banks went through it better than virtually any banks in the world. The reason being is we have a slightly different business model than some of the other parts of the world. The fee-based model, those banking fees that you pay in South Africa are not universal. If you go to some parts of the West, like the UK or the US and stuff, you don't get these huge fees that you come through. We pay pretty substantial fees every month. And that's a big chunk of what, our banks earn. Our banks are, to a certain extent, insulated. There's not as much competition as you would have elsewhere in the world. There's been new entries like, Time Bank and so on. But basically, we have the big 4/5 banks, and maybe you can capitate to that to make it the 6th one. And that's about it. So our banks have not as much competition, so they don't have to be as close to the leading edge in terms of efficiencies and so on, which also makes them more resilient when things do turn bad.
About 50 workers at Heineken Beverages, which recently merged with one of South Africa's largest alcohol producers, Distell, have now lodged a dispute with the CCMA to get the company to employ them on a permanent basis. What's happening in that space?
Yeah, I think these guys were forklift drivers or something, and they basically are, currently temporary. They've been hired through a labor broker, and they want to be made permanent. I think possibly it could be that the merger action prompted this action, because, when there's a change of regime, maybe you have more chance of getting what you want. It's just 50 workers. It's not substantial, but, it is something that maybe just prompted by the merger happening, and maybe workers thinking that the new regime might be more amenable to make concessions.
Clearfield International and Rand Merchant Bank have announced a formal M&A advisory partnership which spans 32 countries. Talk us through the specs of this deal.
Yeah, look, I mean, it kind of makes sense. Africa is going to be a huge, growth region for the next couple of decades at least, and in the next couple of decades we're going to see a takeoff. I think we pretty much it's obviously not an easy or correct analogy to make, but I mean, if you pick like a place like China, and you talk about India maybe being a little more than a decade behind China, Africa is maybe a little more than a decade behind India in terms of the growth path. And I look at India right now; it's growing at 6+% a year. It's going to be the fastest growing large economy in the world this year. And I think if you look forward maybe 10 years to the future, 15 years to the future, you'll probably be seeing places like Nigeria, etc., coming through like that, and Africa would be a source of this growth. So it kind of makes sense to look at the world in terms of opportunity and finding places to invest in. And Africa, like I said, is a great place to invest in, especially if you have a view of more than a year or two in the future.
Absolutely. Thank you so much for that assessment there, Viv Govender, Rand Swiss Portfolio Manager, giving us a sense of the latest market update at midday.